In this video, we're going to be analyzing one of the most popular dividend stocks of all time, and a dividend stock that is a very large position in Warren Buffett's Berkshire Hathaway's portfolio as well, and that is the Coca Cola company. Now, we have a lot of news we need to get to in today's video. Coca Cola recently announced a dividend hike. They released their latest earnings report. We'll be jumping into the earnings presentation, looking at the dividend breakdown, and of course, calculating the intrinsic value of Coca Cola. And these spreadsheets are all powered by ticker data, which you can download at my link in the description. So let's go ahead and start diving into it. Now we can see Coca Cola trading very close to around $60 per share at $59.81. Over the past year, it's pretty much even, down a little bit less than 1%, and over the past 5 years, up around 31%. So it definitely has underperformed the market during that time period. Let's go ahead and take a quick look at some of the dividend metrics. Let's jump over to my dividend breakdown spreadsheet. Again, you can download this over on tickerdata.com. If I come up here and plug in KO and hit enter, you can see all this data is going to automatically load in. Now, immediately we can see starting dividend yield of around 3.24%. So that's a little bit higher than that of the market. So that's a decent starting dividend yield. We can obviously see a nice history of increasing those dividend payouts over time. Now, if we jump over to Seeking Alpha again, we can see this company recently announced a dividend hike of around 5.4%. So this pushed their quarterly dividend payment to around 48.5 cents per share, up from around 46 cents. So that's a decent dividend hike. It does beat the latest inflation results, and we can also see this company recently announced their latest quarter's earnings. If we scroll down, we can see Coca Cola announced Q4 non-GAAP earnings per share of 49 cents, which was in line with expectations, and revenue was a beat of around 150 million, and it was up over 6.9% year over year, which is pretty decent for a more mature company. So when you talk about Coca-Cola from a dividend perspective, the very first thing you do have to point out, of course, is they have 61 consecutive years of dividend payments. That's the biggest reason investors absolutely love this company. It pays out stable and predictable and slow growing dividend payments that you can definitely count on. And while some people claim this is their favorite dividend stock, that is definitely not the case in my point of view, and let me show you why. First off, yes, we can see growing dividends over the past decade. We know this. Nice dividend yield, 3.24%, but look at these payout ratios. Payout ratio for the trailing 12 months sitting at 74.22% and a free cash flow payout ratio of around 81.58%, and that's for the trailing 12 months. But here's where things start to get interesting. This free cash flow payout ratio is for the trailing 12 months, so it doesn't include the recent dividend hike that we saw was around 5.4%. So they're going to be using more capital to pay out dividends. And also, if we jump over to the investor's presentation and jump over to the 31st slide, we can see some of their 2024 guidance numbers. And if we come down here, we can see their 2024 guidance is showing around $9.2 billion in free cash flow. Now, why is this interesting? Well, we need to keep in mind again, so 81.58% trailing 12 months free cash flow payout ratio, they're going to be paying out more in dividends. But also if we come over here, look in 2023, the company produced $9.7 billion in free cash flow. But if we look at that 2024 guidance again, it's a little bit lower at $9.2 billion in free cash flow. So think about that for a moment. In 2024, they're going to be paying out more in dividends and producing less free cash flow. So this free cash flow payout ratio is going to go even higher. With those numbers, I'd expect to see it closer to around 85, 86, or even 87%. That's not really a range I like to see my investments in. And if we look at this chart showing free cash flow versus dividend paid, with the blue line being free cash flow and the red line dividend paid, we can see over the past 4 or 5 years, the dividends being paid out is eating up more and more of the company's free cash flow. When a company is using most of their free cash flow to pay out dividends, it really prohibits a company's ability to organically grow because they can't reinvest much capital back into the business. And so like we can see with the 10-year free cash flow CAGR and the 5-year free cash flow CAGR, they aren't seeing much free cash flow growth because they aren't reinvesting back much into the business. So while on the surface level, yes, it's pretty easy to get excited about another dividend hike and a decent dividend hike at that one at 5.4%, but this payout ratio is starting to climb a little bit higher than I'd like to see it for Coca-Cola. Now, it's not necessarily all bad news for Coca-Cola right now. There was some good news in the recent earnings report. If we scroll down, we can see organic revenue was up 12% during the quarter versus the expectations of around 8.8%. So that's pretty good news. If we scroll down a little bit further, we can see consolidated operating income was up 10% year over year during the quarter. And if we scroll down just a little bit more, we can see looking ahead, Coca-Cola sees full year adjusted organic revenue growth of 6% to 7% versus the 5.9% consensus. So they're expecting to beat expectations. And if we jump back over to the investor's presentation, let's go ahead and look at the 8th slide. One of the things we need to understand, some of this organic growth is simply coming from industry growth. They're expecting some of this growth simply to come from developing and emerging markets, but also population increases. If we jump over to the 24th slide, we'll see what I think could potentially be Coca-Cola's best way to increase their income over time. Now, when you're talking about a more mature company, typically the best way to see gains is going to be from increases in profit margins. And look right here, a comparable operating margin in 2018 was sitting at 28.8% for Coca-Cola, and in 2023 sitting at 29.1%. Now, that's not a large amount, but when you're talking about massive companies, that can really be a lot of capital finding its way to the bottom line. And so again, when we talk about the growth of Coca-Cola stock, again, when we look at this 10-year free cash flow CAGR and 5-year free cash flow CAGR, it's really not that impressive, but management is hoping it will be slightly higher in the future. We can see in 2013, the company produced close to around $8 billion in free cash flow, and in 2023, it was around $9.7 billion in free cash flow. So with all this being said, we need to address the question, is Coca-Cola trading at $59.81 a good price to consider buying in at? And to answer that, let's go ahead and jump over to my stock valuation spreadsheet. Again, you can download this on Ticker Data, but we'll come up here and plug in KO and hit enter. And we can see all this data is going to automatically load in. Now, one thing worth mentioning is if we come down here, we can see a beta of just 0.59. So you should see very little volatility with the price fluctuations with this company. It's one of the things a lot of investors like about the company, very stable and low volatility. Now, typically the first valuation we look at is going to be Graham's valuation, but this really isn't a great valuation in the case of Coca-Cola. So let's go ahead and move forward and look at our discounted cash flow analysis. I'll go ahead and zoom in, and again, this is completely automated with Ticker Data. We just need to plug in our growth rate projection and a few other variables. But with a growth rate projection of around 6%, after adding in all these other variables and dividing by shares outstanding, we come to a discounted cash flow price per share of $44.25. So that's a decent bit lower than the current trading price of this company. Now again, typically the next valuation we look at is going to be our multiples valuation. There's not a great comparables from Coca-Cola, but if we did try, we'd come to an intrinsic value of around $77. But again, I don't think this is exactly the best valuation for Coca-Cola. One of the better valuations for them would be the dividend discount model. And this values a company based on how much they're paying out in dividends and how much that dividend is growing over time. And you can see with a dividend growth rate projection of around 4%, discount rate of 8%, we come to a dividend discount model price per share of around $50.44. Now again, one thing that is worth noting, if they can't continue to reliably grow their free cash flow, they won't be able to maintain a dividend growth rate of 4%, so that free cash flow growth is definitely something to keep your eye on. But if we jump over to the output tab, we can see in the scenario the two valuations that we used are discounted cash flow analysis at around $44.25 and the DDM at $50.44. And when we average those two together, we come to an intrinsic value of around $47.35, a decent bit lower than that current trading price. So with a 10% margin of safety, you could see our acceptable buy price coming in at around $42.61 per share. Now we have to remember, in the case of Coca-Cola, this is undoubtedly a company that trades at a premium. Investors looking for safe, reliable income know that Coca-Cola is a stock they can rely on. It has a strong brand and is extremely predictable with its cash flows and dividend payouts. In complete transparency, like always, Coca-Cola is actually a stock I hold in my personal portfolio. If we blow up my growth chart and come down here, we can see I'm currently up close to around 30% on this position, but it is worth noting I haven't added to my Coca-Cola position in probably 3, 4, or 5 years. So there you go, there is an analysis of the Coca-Cola company. Go ahead and let me know what you think of this company in the comments down below. Like always, if you'd like to be able to download any of my spreadsheets and get access to the Ticker Data function that allows you to automatically pull into company stock financials, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.